Good morning. Today is Monday, April the 10th, and it's also Easter Monday. And for all Christian out there, I wish you guys happy holidays. And today, not all markets are open, especially in Europe. We have the major markets in Frankfurt, Paris, and London still observing Easter Monday, so their markets are closed. So that will mean that the liquidity will be a little bit affected because, after all, London is a major financial center. Without London, trading volume will be very, very low. Especially in the afternoon, the market will be very, very quiet. So right now, what we're going to do is basically recap what the market did before Easter Friday. So we can see that prices in the Dow Jones actually has gone into a consolidation. The market have a high of 33,634.2 on Tuesday, and then the market closed down sharply. So what caused this market to close down sharply was because of the jobs. Jobs means job opening, and for the first time since the pandemic, the number has actually gone below 10 million new jobs creation. So it means those advertisements and potential employers are opening, looking to hire staff. That number has actually gone down below 10 million. So this is the first time since the pandemic ended. So it is causing the market to believe that the U.S. economy is soon going to go into a recession. That caused the market to come off. So on the back of this news, there's a very high possibility that the high we saw last week at 33,634.7 could be the high, following which we probably would have to gear towards looking at the downside, because right now we are in the earnings seasons. The banks are definitely going to be decimated. So the bank earning is definitely going to be ugly. So what we're going to see is the other banks, the other major corporations, especially the tech sector, see whether their finances are going to be okay. So we are definitely going into the period of time in which the market will be looking at earnings from the various US companies. So that will mean that the market can be pretty volatile. My personal bias is to look for downside, because I do have a sense that the market is getting very toppish. Okay, over in S&P 500, we can see that the market not only registered a high of 4,133, it closes Tuesday after the job opening report was released. It closed as an outside bar. What is the outside bar? Outside bar means market have a new high but closes outside the previous day's trading range. You can see this red color bar here is actually representing the entire Tuesday move. Okay, so this is on the 4 hours. Let me show you the daily. The daily is showing the same thing. This is an outside bar. This means the market, this is a classical reversal pattern, and it is very bearish. So if this give me the conviction to say that there is a high chance that the high traded on last Tuesday, could be the top, marking the end of the rebound that we saw since mid-March itself. Okay, so in the S&P 500, the low was 3,808. It went up to 4,133. This happens in the 3-wave technical rebound, which is very corrective looking. So with this outside bar here, it does give me the idea that market may have already picked up. Okay, so the market has actually experienced a bit of a rebound, about 50% of its entire drop from Tuesday to Thursday itself. So this is actually a great level. If we can hold at this level at 4,105, this could present a selling opportunity in my opinion, because the risk, all I need to do is put my stop just above 4,009, let's say 4,200. Okay, and I'm going to take the view the market may have already topped. Either this is the ultimate top, or the market may actually goes into this bracket of prices between 4,140 to 4,195. Okay, remains to be seen, but I get a sense top side is getting to be very, very limited. Okay, over in the Nasdaq, we don't see any convincing sign like what we saw in the S&P 500 in terms of a reversal pattern. There is no classical reversal pattern. This is a daily time frame. The high traded on Tuesday was 13,204. The market went down on Wednesday, managed to rebound quite a fair bit on just before the market closed on Thursday itself. So we can see the price remains the high at 13,204. Like I said, there's no classical reversal signal yet. So I will take a rain check here and wait for more convincing sign to say that the market has already topped. Over in Asia, we can see that Nikkei is basically mimicking what we are seeing in the US equity index. The high traded at 28,282 is also happening on Tuesday. And again, on the daily time frame, there is no classical reversal signal here, but the market did fall over the period of 24 hours. Basically falls quite sharply, because it took the market from 26,632 all the way to 28,282. More than 2 weeks to climb to this level, but it took the market 48 hours to erase 50% of that gain. Okay, so that could be quite serious on hindsight. So today, this morning, we have a bit of a rebound going on. The highest traded today is 27,737. So let's see whether it can hang on to it. But basically, I think the market may actually fall back. Now, what I can see possibly happening is there's a potential for a very large triangle that we are seeing in the Nikkei 225. Now, you can see that the low is 24,681, traded a high at 29,222, and the market has gone into a consolidation, which shows that the market is compressing. What it means is that the highs are getting lower, the lows are getting higher, and this is giving me a sense that the market is moving into a triangle pattern. And if this is indeed a triangle pattern, it is very easy to trade. Okay, so we need to determine where is the start of this triangle. We have A, B, C, D. So this pullback here could be forming the fourth leg of the internal wave pattern here, of which then the market should ideally rebound without taking up the low of 25,661. So if this is the case, the next rebound is going to be key. Okay, the next rebound may or may not be able to challenge all the way to the upper end of the resistance line, but let's say the entire length from 28,735 drop to whatever the low here, we take a measurement of 61.8% retracement. That level onwards, I think, will be quite ideal to start looking for selling signal, because the next move, if this is indeed a 5-wave triangle pattern, the next move after the formation of the fifth leg of this move is going to be a violent sell-off to take out 24,681. Okay, how big a move? Just take the entire distance traveled between A to the opening, to the start of the triangle. Essentially measures about something like 5,000 points. So if it's a 5,000 points, whatever the market breaks, okay, then you can extrapolate 5,000 points from where it breaks out. So that is how big the potential is. So I think the market bias is still to the downside over the medium to long term. So be very aware of this if this is a triangle pattern. Okay, so then the over in Hong Kong, we can say that the Hang Seng Index has very little movement. Today the market is open. Sorry, this is on. Sorry, this is up to Thursday, so we have no updates. Not sure whether Hong Kong market is open or not, but I think it should be open. Okay, so anyway, the rebound from 18,829 to 20,722 is a 3-wave rebound, and it looks very symmetrical, and it's very near the area which I think is going to be vulnerable to the sell side. The area is 20,800 to 21,100. So the market high this round was 20,722. Okay, so it's very, very close to this bracket of prices, but by and large you can see that the market has pulled back 3 days in a row, and there is a possibility it may have already topped out. Now, on the other hand, we have seen an influx of capital into Hong Kong ever since the Credit Suisse debacle. Even Singapore has actually benefited from the inflow of funds trying to get out of Swiss banking. Okay, so that could actually underpin the local equity market, because once a fund moves into financial center, it doesn't stay in the bank, it goes into risky assets. So this could actually underpin the Hong Kong market. But technically speaking, there's a risk that the market may have topped out at 20,722 this round, and a new pattern could unfold, unless of course the market falls sharply below 18,829. Then of course this is a continuation of this fall from 22,700, and if that is the case, the market may go down to 18,000. So this is the technical outlook, but again we have to look at the price on a daily basis to determine where this market is likely to go. Over in mainland China, now ever since China reopening, there's an influx of foreign companies trying to get back into the Chinese market. We can see there is a scramble from head of state to actually go to China to meet up with the Xi Jinping, to meet up with the local officials, to basically drum up business. So this is actually underpinning the Chinese market here. Okay, so this is actually a bullish development. Okay, pending of course, barring any external shock coming out from elsewhere. Okay, whether it's going to be a deterioration in the geopolitical arena, or whether it is going to be some kind of economic event that happens outside of China, that those external shock could actually impact this outlook here. But by and large, left on its own, I think the Chinese market has a lot of potential. If the market can actually close below beyond 4,167 in the CSI 300 index here, then the market has the potential to extend this rally beyond 4,267. So you can see the market from here 3,500 points to 4,270 points thereabout. That move here could actually superimpose by another 100%. That means the market is going to go up beyond 4,530 on the condition that there's no external shock. Okay, left on its own, I think the market has enough momentum to go up. Okay, but again, we all do not know. Okay, over in energy markets, after market gap up last Monday upon the news of the OPEC plus production cut in crude oil, we can see the prices of crude oil has gone up to $81.75 per barrel, and it has not gone any higher. So there was a marginal high immediately after that, because the initial shock was saw price of crude oil went up to $81.51. On the following day, on Tuesday, the market went up marginally higher at $81.75. But since then, the market has been pretty quiet, but of course we can understand why it is so, because we have a long weekend because of the Good Friday holidays. Okay, so all eyes will be looking at what the market will do going forward. If the market can actually push back a little bit, somewhere to $77.50, it makes it very attractive to start buying again, because this production cut is on top of a previously announced cut in last November, taking the entire production cut to 3.66 million barrels per day. And this is going to last all the way to the end of 2023. Now, the latest production cut was kick in May next month. So when we look at the entire production cut in totality, we can see that this is a big chunk of supply that's going to be missing from the market, and there is going to be pressure to the upside. So trade to the upside, I think it's going to be safer than trading to the downside. And over in precious metal, we are continuing to see the unfolding of this triangle pattern that I've been talking about. Now, the triangle pattern can be very explosive. So we have a breakout to the upside. High trader is $2,032.11, and the market run is pulling back. Now, normally in the triangle pattern, there is hardly any pullback. Even if there's going to be pullback, it's going to be very, very shallow. But this time, there's a bit of a unique situation, because it happens in the week of the Good Friday, and markets are naturally will want to play safe. Those who have actually gone long have actually taken profit, and this taken profit has continued into this morning. The price traded to a low of $1,988.99. Okay, basically I've already gone long. Okay, the gold again, because I previously bought at the E here, which is how I trade triangle anyway, because there's an A, B, C, D, E. I bought an E at $1,960. Market went up. I didn't take profit. Now the market pulls back. I has decided to add on to my long position, because I think this market is going to actually extend its rally all the way to ideally the target about $2,070. But I'm be more than happy to exit my long position at $2,060 and stand aside, because typically in a triangle pattern, where we have a post-triangle thrust, this could be part of a post-triangle thrust. The market actually violently went up, and then it will continue to go all the way to its target. Ideally, we will see the low somewhere around current price, and then the market goes back up again. And then once it reaches target, it could be equally violent reversal may actually occur. This is characteristic of a post-triangle thrust. It goes up fast, it breaks up fast, it comes back just as fast. Okay, so I want to avoid the pullback here. So by and large, I still want to buy. If there's going to be such a scenario, I don't think I should be selling. But if the market ever pulls back again after it hit its target, then that buy position I want to keep for a while, because that means the market has decided that it wants to go even higher. Okay. Over in the silver market, we don't see very much of a pullback. In fact, the market is in a very tight consolidation. The market has not gone below $24.50. So this market is very, very firm. So on a relative basis, we can see that the silver market is a lot more bullish than the gold market. But because the silver market doesn't give us an entry point to buy, so there is no choice. There's no case of buying silver at the moment, because there is no low risk setup here. So I'm just going to use whatever happened in the gold market to extrapolate if I want to trade silver. So for those who are interested to trade silver, you may have to wait for a while, wait for the reversal to happen in the gold market. Over in the dollar market, you can see dollar index continue to slide all the way up to last Wednesday, before the rebound comes in down. This is a Good Friday rebound, because the market has been so short dollar, and then going the long way, and people are playing safe. They basically sell off, they basically do their long liquidation, and this is profit taking. So ideally we want to see continuation of this profit taking into the area of 102.18. Okay, that will be a perfect level to take profit on this rebound, because this rebound, unless it accelerates to the upside, I think this is all it can do. So I've already gone long to trade the rebound here. So at 102.10 thereabout, I'm more than happy to exit my speculative long position, because there's a possibility market may continue to go down all the way to 100.6. So there is still that downside risk still not eliminated. Now, of course, when dollar started to rebound, the other currency also pulled back. We can see sterling traded to a high of 125.25, actually dip into 128.90, and this is where I actually bought, because I think if the dollar continue to renew its slide, then of course all these currencies is going to rally one more time. Okay, so this is basically buying on dollar weakness, not buying on the strength of this currency here. But basically, I think there is a technical basis to buy this, and I actually bought here. Okay, over in the euro dollar, it's the same thing. The euro dollar actually went up to high of 109.75 and then pull back. And this low here is where I managed to enter a long position. The low here is 108.70. And if the market did not accelerate to the downside, I think this level should hold, and for us to see another high being traded beyond 109.75. Okay, Aussie is actually very, very quiet. The market actually started to trade lower from 0.6795 and traded to a low of 0.6640, and the market right now is trading below the rising channel. There's a very good chance that it will continue to slide lower all the way to 0.6565. Okay, dollar yen is where I get excited, because dollar yen is where I think the next move is going to happen. The market has been falling from 137.90 all the way to 129.65. Okay, then we have a rebound back to 133.75. So this rebound here is probably over, because it's a three-wave rebound, and if this is the case, then I think the next move is to the downside. I have actually gone short around 133.60 levels, and now the market has rebound back to 132. I have actually gone short again. I positioned another short position, but the market right now is just above my latest short position. I do believe at some point the market is going to renew the decline that we saw from 137.90. So if this is the case, once the market break 129.65, it is starting to extend all the way to 125 half. This is where my target is. Okay, over in dollar CAC, the pattern is very similar to what we are seeing in the dollar index. This rebound that we're seeing is basically a rebound as a what we call profit taking. The market has gone into this bracket of prices, which make it very vulnerable for the market to actually come up. Once the market breaks below the rising channel, it is a sign that the market is about to resume below 134. Okay, so this is still short dollar outlook. Over in Bitcoin, Bitcoin has a bit of a push up this morning, but not by very much. Market right now is above $28,300. So we can say that the market has been actually going sideways for more than 2 weeks now. The high of 380 is still underpinning this market here. The good thing about looking at this chart here is that the low here is at 19,569. Now, it rallies all the way to 29,380, and this market have not sell off in any aggressive manner. Meaning to say that this rally here is very well supported. There's no major selling interest trying to pick the price back down. So there's a lot of buying interest in this Bitcoin here. From this chart, from what I can see, ideally the market pulls back down here, continue to drift lower, ideally into 26,300 level. That will make it an equality move, an ABC move, although it's not very neat, but it's still ABC. Ideally market stops falling between 25,660 to 26,330 dollars, and from there they build a base for it to propel higher beyond 29,380. So technically this is how it looks like to me. Okay, so this is all I have for you. And this week, the most important numbers to expect will be the CPI numbers, followed by retail sales on Friday. So watch out for these two numbers. It will cause a bit of a firework. In the meantime, take care, and I'll see you tomorrow. Bye-bye.